Okay, my segment today is on Kraken Robotics, and we did a Your Stock, Our Take segment on Kraken about a year ago, but we just recently, over the past week, got a request from one of our viewers to do an update on the company. So happy to do that. Kraken Robotics, this is a marine technology company. They provide different types of robotic systems, sensors, and batteries for marine operations. And they primarily serve the military and defense, offshore energy, and ocean exploration markets. The company is trading under the symbol PNG on the Venture Exchange. It's trading at a stock price right now of $1.46, market cap of $336 million. So Kraken has really performed extremely well, particularly in 2024. We can see with this 5-year chart, it was really in a trading range for a while there, but it's broken out of that basically at the start of this year and has generated a substantial return for investors. When we did our segment on the company about a year ago, it was trading at 40 cents roughly. Today at $1.46. So the company's performed extremely well. Why don't we look into why? So we're going to start with the financial results, the Q2 results, which were released in August. Essentially strong performance right across the board. Revenue up 67%. Gross profit up 50%. Now we do notice that gross margins were actually down about 600 basis points, but almost 80% growth in adjusted EBITDA. Adjusted EBITDA margins of 24%, up from 22%, and net income of $2.6 million for an increase year over year of 31%. Same with the year to date or 6 month results. Our revenue more than doubled. Gross profit up 71%. Again, a decline in gross profit margins, but an increase in adjusted EBITDA margins. So adjusted EBITDA up 142%. And then net income of about $4.8 million compared to marginal net income of $661,000 in the previous year. So one of the things I talked about when we covered this company a year ago was the lack of profitability. At the time, it looked like it was transitioning into profitability, but it wasn't quite there yet. And that was an issue to us, as profitability from current operations is a minimum criteria for our investment. So we can see over the past year, Kraken has made a tremendous progress in terms of net income growth and just generating that meaningful level of profitability that we would need to see at a very minimum before we would consider investment. So looking at the management commentary, very positive commentary and outlook for management. They're seeing a robust demand environment with growing opportunities in the defense and the offshore energy markets. Now, this is largely driven by a global focus on security with the Ukraine war. A lot of countries are increasing their defense budgets, more focus on security. So big growth in that area, and then also energy independence and just growth in the energy sector. So the CEO said that the demand environment for their technology solutions has never been better. The opportunities they're seeing in defense and offshore energy continue to grow. Significant new orders signed in Q2, $8 million order for subsea batteries, additional orders as well. So certainly the backlog seems to be healthy. And then just in terms of management's perspective on market demand and expansion. So one of the things they're seeing, again, that growing increase on defense spending and security, one of the things specifically in expanding mine warfare market. So navies worldwide are planning and executing significant upgrades. And this is certainly something that Kraken can help to service. The company's major UUV or unmanned underwater vehicle customers are expanding their facilities. So this also supports future growth. Kraken is expanding its battery production capacity in response to increasing customer demand. The engineering business and business development are both in strong position right now, and they are continuing to invest in innovation. So they're developing their current products. And they're also investing in the next generation of subsea battery designs. And then they're also looking at a record year for service revenue as well. Now, the company has provided guidance for 2024, looking at revenue in the range of 90 to 100 million. That would be about 30 to 44% growth over 2023. Adjusted EBITDA in the range of 18 to 24 million for 28 to 70% growth, and about a 400 basis point increase in adjusted EBITDA margin. So we have seen that in the recent financial results, increasing margins on the adjusted EBITDA line. So if I were to look at this in terms of a valuation basis, and then just to essentially make a forecast on what the earnings will be for 2024 based on the adjusted EBITDA guidance, we're looking at about 4 to 5 cents in earnings per share. So say 4.5 cents. And at a current stock price of $1.46, that would be a price to earnings ratio of 32 times. So what is our take on Kraken today? Well, we like the company. I mean, in terms of just general fundamentals, they're a growth oriented company, very unique in that they're a micro cap in the defense space that is now transitioned into meaningful profitability. So they're really taking advantage of opportunities within the defense and security space, and they're doing that in a profitable way. A lot of times in the micro cap space, you'll have companies that are aligned with attractive markets and industries, but they're not generating profitability. So we really like to see that strong outlook for management. They do have a net cash balance sheet as well, so strong balance sheet. Now, the only thing that I will say is that they are trading in a premium valuation of 32 times expected earnings. So, given the growth that this company is experiencing, I can't say that that's an overinflated valuation necessarily, but it's certainly not. I mean, it's not cheap at the current price, and I would say that looking forward, future growth is really going to depend more on earnings growth as opposed to valuation expansion. There's probably limited opportunity for the valuation to really move much up beyond, say, the 30 to 35 times. It's always possible, but if I'm looking at this rationally and logically, probably in that 30 to 35 times is fair value. But there are good growth drivers behind the company. So, I would say fundamentals are strong. We're continuing to look at it. It's probably time for another discussion with management, which may happen in the near term here. So trading close to fair value in the near term, but certainly very impressed with how the company has developed over the last year here. And we will be watching the Kraken story very closely.
Yeah, I think that was a very comprehensive, Aaron. It just shows exactly what we're looking for. An increase in profitability will drive the share price higher. And, last time, like you said, last time we looked at it, profitability still was a little bit maybe more on the risky side for us. But again, I mean, management's talking about demand being strong. They've got strong backlog. The Navy is making, or navies around the world are making significant investments. One thing that I would note, it's kind of a contract driven business. So, we need to continue to see this backlog and contracts continue to stay robust for continued growth in the business. But I mean, the bottom line is, right now the business does look, like Aaron said, close to fair value. But we should definitely reach out to management here. I will be doing that. So we can speak with them again to get an update on the company.
And just to give an idea of how we always say you don't always need to invest in you shouldn't invest in unprofitable companies because you don't need to be in early. So for Kraken, for example, they've returned most of the return over the last bit, 60% since June. They were already profitable at that point for a few quarters. So even if you were waiting for a few quarters of profitability at that point, you still would have had a 60% return over the past few months. And that just shows the market is not, especially for small caps, always watching. They're not going, oh, it's now profitable, we're going to put it up 500%. You have time to buy after it becomes profitable.
Yeah, it's a good summary that Aaron provided on Kraken. The real inflection in the share price started when they started guiding towards better profitability, not only this year. They reaffirmed their guidance, last year and into this year, and going forward, you can see the backlog going higher. And then, the better profitability numbers started to come in, and the stock has taken off since then. It's an excellent example of a company, again, that is driven by that underlying profitability, underlying growth in that profitability, and a forward outlook for profitability growth as well. So, I mean, that's what drives the stock ultimately over the long term. You could have sat in this stock for years while it wasn't posting anything close to what looked like sustainable long-term profitability, or at least, over a 1 to 2 year period. And the stock wouldn't have done much for you. But when it hit that inflection point, that's where you've really seen it take off. And we've seen that in a number of stocks over the past 18 to 20 months where they've really upticked. And even just in the last 6 months, we've seen several companies really hit an inflection point in terms of their profitability and the returns. You're not talking about a 10% return. You're talking about 100 to 200 to 300% because you're seeing that. And you get recognized for that growth and the potential for continued growth in these businesses. So, because you were trading at low valuations at that time too, as well.